Hi, everyone. There will be sort of a lot of kind of interaction, I hope, as part of today's conversation, because taxes are messy and frustrating, and they're not always designed for creative individuals. So by all means, bring your questions. And if you're comfortable, there is an option within Zoom to share reactions. There are these little emoji buttons. So I just shared a little thumbs up one. Go ahead and share your thumbs up emoji if you are really excited about taxes today. Nice. All right. Thank you. I appreciate that. A handful of thumbs up. We're also going to have a little bit of a pop quiz later on. So the thumbs up will be yes, and then the clapping emoji will be no for purposes of the pop quiz. So get excited about that. I'm going to go ahead and share my screen. Per usual, you'll get a copy of these slides afterwards. So definitely relax, get comfortable, sit back, enjoy, and know that you will have access to all of this information later. So today we're talking about taxes, but you knew that. And many of you know me and know that I have gotten to hang out with you for the past couple of weeks, and that I am the luckiest money person ever because I get to have conversations like this with creative groups all over the country. So we are going to be talking about creative deductions today. What sorts of things are deductible for you on your taxes? We'll also sort of review the overall tax landscape in pictures, and then we'll end by talking about the records that you need to keep. And quick polling question, how many of you sell merchandise? This could be a digital download of your music, this could be CDs or LPs, this could be shirts or hats or other swag. Just put a thumbs up in your emoji or type in the chat if you sell merchandise. I see 1, 2. Okay, 2 people. So for those 2 individuals, you get to think a lot about sales tax, which is very, very exciting. And what I need you to remember about sales tax is if you are selling more than $100,000 worth of goods, or you have more than 200 transactions of sales, right? Then you need to really start paying attention to sales you may make in states that are different than where you live. That was the fallout from the Wayfair decision that the Supreme Court made a couple of years ago. And so that was a big deal in sales tax world, because the threshold that South Dakota set was $100,000 of sales or 200 transactions means you have to collect sales tax in South Dakota, even if you never go there. And so many states have followed suit and adopted similar laws. So kind of keep those thresholds in mind. I hope all of you sell $100,000 worth of stuff on a regular basis, but that 200 transaction number can be tricky for a lot of individuals because let's say that you have a strong following in California and 200 people during the year purchase some of your goods, whether that is music or a digital download or a t-shirt, that could trigger a sales tax filing obligation for you in California. So keep those thresholds in mind. Per usual, all of this information is educational and not intended to be used as tax, legal, or accounting advice. And we want to make sure we're sharing the floor with respect. All of your questions are getting answered. Put them in the chat for sure, and I'll keep an eye on that. We're all equal parts teachers and learners in this setting. And just in case someone shares a hypothetical situation about something they may have done on their taxes and that turns out to not be right, we want to make sure that sort of story stays within this space, right? So, how do taxes work? This is a very simplified picture of what the tax landscape in the United States looks like. Form 1040 is the form for individuals. Schedule A is where some individuals choose to itemize their deductions instead of taking the standard deduction. And of course, we're talking mostly about personal expenses there, right? Generally speaking, personal expenses are not deductible, but there are some exceptions on Schedule A. And so if you have enough expenses on Schedule A that add up to more than your standard deduction amount, then you would choose to itemize. That is totally different, though, than your business expenses. Your business expenses are going to be reported on Schedule C if you are a sole proprietor or if you are the only owner of your own limited liability company or LLC. If you are part of a partnership or an S corporation, or you have an LLC with multiple members, you're going to be looking at Schedule E to report that income. And it works pretty much the same way as Schedule C, but we assign different letters to it. So this is the simplified picture of tax world in the United States. What you need to know is individuals, Form 1040, business owners, including musicians who teach or gig or do any sort of other kind of freelance musician type of work, you can report your income and your expenses on Schedule C. So the first big question that you need to kind of answer when you're thinking about your tax world is, how do you earn money? Now, once upon a time, like in 2016 and 17, it mattered, but it didn't really matter. Now it matters a lot because there was something called the Tax Cuts and Jobs Act, which was super exciting for tax geeks and mostly just frustrating for everyone else. But what happened as part of this law, and there were a whole lot of things that happened, but one thing that became really important is that you have to now figure out if you are paid as an employee for something or if you are paid as a contractor or a freelancer. And that becomes important because any expenses you have associated with a job where you are paid as an employee are no longer deductible to you. They used to be deductible to you on Schedule A, but you can't deduct those anymore. So what does that look like? Let's say you are a musician and you are hired to perform as part of some sort of touring production, right? So you're traveling all around the country. It's a great, great gig. And because of union or equity rules, they are required to pay you as an employee, but you are responsible for your lodging and your meals while you're traveling around, right? That is W-2 income to you. You're paid as an employee. You probably had to pay 10% of that to your agent or manager. That's no longer deductible because you're an employee. And you have meal expenses, lodging expenses, maybe some travel expenses. None of that is deductible to you anymore either. But what if instead you're not an employee of this touring production company where you're performing, but you yourself and some of your friends have a chamber group and you travel around gigging and you give performances in different places and you're paid either a flat fee for a performance or maybe you split the take at a door or maybe, it's a really low fee and then you sell merchandise, right? It feels like almost the same fact pattern because you're still traveling around, you're still performing, you're still getting paid. But if you're doing it in a capacity as a freelancer, all of a sudden, since you're not a W-2 employee, all of your expenses are deductible. So that same travel, the meals while you were in travel status, cartage of your instrument, all of that stuff is now deductible to you. So it becomes really important for you, the individual, to know how you're being paid. If you're being paid as an employee, none of your expenses are deductible. If you're being paid as a contractor or a freelancer, everything is deductible as long as it's ordinary and necessary, right? And unfortunately, it's your responsibility to kind of keep track of those things. So here's a quick summary of how generally people in the arts earn money. Generally, if they have any sort of W-2 jobs, whether those are performing arts jobs or maybe other types of employee work you might do, you have no deductions associated with that work. If you receive grants or awards, there's a chance that could be reported on your Form 1040, but a lot of individuals choose to report that income on their Schedule C as well. If the funder cares about where you report it, they'll let you know. Otherwise, it's kind of up to you to figure out where it works best. If you are freelancing or gigging or picking up things here and there, you will probably receive a 1099 at the end of the year, and that income will generally be reported on your Schedule C. And then if you're teaching, say, out of your house, right? If you're teaching for an institution, you're probably an employee and getting paid as a W-2 employee. But if you're teaching lessons out of your house or maybe in some sort of other community setting or something where you're not an employee, you might get a 1099 from the institution, but more likely you'll just be responsible for collecting income from your students. There won't be any 1099 associated with that. Just like if you were selling merchandise or selling music, there's no 1099 associated with that, but it's your responsibility to track and report that income, and you would report that on Schedule C. So when we think about Schedule C, the big question is, what is deductible? And why do we care about this? We care about this because as a business owner or a freelancer or a creative person, you will earn some amount of income. And then you will have ordinary and necessary business deductions that reduce that income. And then you pay tax on whatever's left over, your net income, right? So we like to have as many deductions as possible so that the amount we earn for tax purposes can be reduced to the smallest amount for us to pay taxes on. So how do you know if something's deductible? In general, as long as something is ordinary and necessary and effectively connected to your trade or business, it's deductible. It also can't be lavish or extravagant, but that's not a problem I generally see among individuals in the arts. So what do these words mean? The IRS has defined them for us, but the definitions aren't super helpful. They define ordinary as common and accepted in your industry, and necessary as helpful and appropriate for your trade or business. It is your job to document how something is common and accepted and helpful and appropriate for your trade or business. It's also your responsibility to document how something is effectively connected to your trade or business. You all have gotten to know Peter as he's been hosting this festival, right? So let's pretend Peter and I decide to go out for lunch after today's session. And I'm going to say, Peter, why don't you give me some feedback on how you thought the tax workshop went, right? We're going to go out to lunch. We'll have some delicious food and I'll go ahead and pick up the tab, right? Because Peter's giving me helpful feedback in connection to my profession, right? Teaching about taxes. So on my receipt for our $50 lunch, I would say lunch with Peter to discuss feedback from next festival, right? That would be effectively connecting the expense to my trade or business and documenting the business purpose. That makes a lunch with me and Peter deductible to me for tax purposes. If Peter and I just went out to lunch as friends, right, that's not deductible to me. There is no business purpose associated with that meal, right? So documenting the business purpose of an expense is what takes a normal expense, lunch with a friend, and turns it into a deductible business expense, as long as it's ordinary and necessary, and as long as you feel okay about documenting that particular business purpose, right? So that's the thought process you will go through as you think about, is this kind of thing deductible? Well, is it common and accepted? Is it helpful and appropriate for what it is that you do? And is there some sort of connection between the expense and your business? And as we'll see, there's a lot of room for interpretation there, right? The first hurdle you have to clear as you start thinking about these business deductions is, are you actually running a business? And when the IRS does raise questions into someone's tax return, this is where they usually start, especially when it comes to businesses that seem fun, like businesses in the arts, right? So the IRS will often ask, are you really running a business, or is this just something you're doing for fun and you're trying to turn your expenses associated with this thing you do for fun into deductions? So this is a common line of questioning from the IRS when they raise questions. They do not do that very often, but it's something for you to be aware of. So let's pretend I decide one day I want to start playing the harp. I've always wanted to play the harp, and it's just something kind of nice that I want to do, right? I'm going to buy a harp. I'm going to get some lessons. I'm going to probably spend a lot of money on new strings, right? I'm going to practice. Maybe I'm going to have to rent out some space to practice, right? Because I can't play the harp in my front living room. There's no room, right? So all of these expenses start to accumulate. And I might decide that I'm a harpist, right? And I'm going to deduct all of these expenses. But simply pursuing a hobby does not mean you are running a business. So how do we know if you are running a business? The IRS has told us what they look for. They look for things like, do you have a website? Are you actively seeking new business, whether that is new students, new performance opportunities, new grants or awards you are applying for? Are you actively engaging and seeking new business as part of this business you are running? If I'm just hanging out playing the harp, I probably don't have a website. Why would I have a website for that, right? And I probably don't also pursue any new opportunities, right? Because it's not something I'm seeking to do for money or professionally. It's just a new hobby I'm starting, essentially, which makes it not deductible as a business. The other things the IRS looks for is, do you keep books and records? Do you have a log of your students? Do you have a list of the places you have applied to? Are you keeping a calendar of different projects you're doing? And is that important? Are you tracking your expenses? Are you tracking your income? If someone doesn't pay you, are you following up with them to see when they might pay you, right? Keeping books and records is a great indicator that you are pursuing something professionally instead of doing it just for fun. And then the last thing they look at is, are you seeking to better yourself in the field, right? So coming to this type of event, a festival like the next festival, that is evidence that you are seeking to better yourself in the field. Counts as professional development and networking, seeking out mentors, all of that other stuff, right? All of those things help support the case that you are doing this thing that you're doing professionally, as opposed to doing it just for fun. The other thing I will say is that in general, the IRS likes to see that you are showing a profit in your business in 3 out of every 5 years. Now, that is what we call a rebuttable presumption, because it is very possible that you may not show income in 3 out of every 5 years. The arts are finicky, right? And by the way, we're in the middle of a global pandemic, so many of your performance opportunities may be stopped for a while, right? So things are uncertain, and you can always provide evidence for the fact that you are running a business, even if you don't consistently show income from that business, but that's a little bit harder. So my advice would be, keep really good records, document what you're doing to pursue professionally what it is that you are doing, and have those records handy in case the IRS ever asks. They may never ask, but if they do ask, you want to be prepared to respond. So that's the first biggest hurdle. Are you actually running a business? The second biggest hurdle is this idea of bifurcation. We know that personal expenses are not deductible. And we also know that ordinary and necessary business expenses are deductible, right? So where's the line if you're using something that is a little bit personal and a little bit business? And I'm going to hold up my cell phone here, right? I suspect many of you have one that looks kind of similar. That is one of the first places that this idea of bifurcation comes up. Some people have 2 cell phones, one for business, one for personal purposes. That doesn't really happen anymore, though. Most people have one phone, and they use it for business, to take business calls, to update their social media pages, to respond to emails, to check their calendar. Maybe they have apps for scheduling students, or apps for tracking income and expenses, or tracking mileage if you use your car to go to and from gigs, right? You probably use your cell phone for a lot of business purposes. And you probably also use it for a lot of personal purposes. Maybe you're updating social media for your personal accounts instead of your business ones. Maybe you're on a group text with some of your best friends or your roommates, right? There's lots of sort of wiggle room in the middle here where your phone could be used, some for personal purposes, which we know is not deductible, and some for business purposes, which is deductible if it's ordinary and necessary. So the question becomes, how do you figure out what you deduct? And the answer is we bifurcate the expense. So let's say you purchased your cell phone a couple years ago. So we're not thinking about the purchase price of the cell phone. That was in the past. But we're thinking about the $100 you spend on your phone and data plan each month, right? So what you might want to do is track how you use your phone for a month, right? So maybe you use one of those screen time tracking apps, or maybe you just kind of pay attention and make a note to yourself, right? And what you might want to do is notice and pay attention, and maybe you see that you use your phone 60% of the time for business purposes and 40% of the time for personal purposes. In that case, if you've documented that, that would be evidence that you could deduct 60% of your monthly data plan as a business expense, and then 40% is not, it's just personal, right? So this is an example of an expense that can be a little wishy-washy, because personal expense, not deductible, ordinary and necessary business expense is deductible. But it's up to you, if you want to claim the deduction, to do the necessary tracking to substantiate or prove that that deduction is valid. I'm going to throw one more curveball on this cell phone idea into you. It's very common in the arts, as I mentioned before, that you have W-2 job work and also 1099 work. Right? So let's say your W-2 job is teaching. Maybe you're an adjunct instructor, or maybe you teach for a preschool or a community college or something, right? You are paid as an employee. Your tracking is a little bit more complicated because you need to track personal use of your cell phone, W-2 job use of your cell phone, which is not deductible. Remember, any expenses associated with your W-2 job that you pay are no longer deductible to you. And then you have your freelance work or your own business work, and that use of the cell phone, which is deductible as long as it's ordinary and necessary. So your tracking is more complicated. And with assets like cell phones or computers or iPads, you have to hit at least a 50% threshold of business use before you deduct anything. So if you use your cell phone, some for your W-2 job and some for your business and some for personal purposes, you might not get to that 50% threshold. I'll pause here. I don't see any questions in the chat, but if you have any, by all means, put them in there. Because these ideas of, are you running a business, and then how do you bifurcate your expenses? Those tend to be pretty thorny issues that come up as you're thinking about your records. Still no questions. All right, we're going to move on to the pop quiz then. We're going to go through a bunch of different categories, and you get to vote. Thumbs up with your emoji means yes. Clapping emoji means no, right? So do you think professional support is deductible to you as a professional musician? Valeria says no. Rebecca says yes. Jackie, Sunny, both say yes. Ryan says yes. Yes, you are absolutely right. I would consider most professional support ordinary and necessary and effectively connected to your trade or business. So what could this look like? This could be lessons. This could be paying for a masterclass if you're going to attend that. It could be your accountant or your attorney or a bookkeeper you might hire. This could even be a marketing or social media person that you hire, right? The trick for this would be to document the business purpose, which you're going to have to do regardless of whether something is ordinary and necessary. And then make sure you're clear on what it is, right? Question in the chat about mileage. I will come back to that question when we get to that particular deduction. Yes, it is still deductible, but don't tell anyone. Next category, hardware and equipment. Maybe your instrument, maybe your computer, maybe a stand for your music. Are these kind of things deductible to you for tax purposes? Thumbs up for yes, clapping for no. Yep. WMH says yes. Lots of thumbs up. JT, Madeline, yep, Sam, Rebecca, absolutely. This is deductible to you, right? Again, you want to document the business purpose, right? And bifurcate it if there is some sort of personal use. Let's say you really want to buy a 3D printer because you're going to 3D print an instrument for a new experimental piece you're going to do. And you decide that you're also going to 3D print fun things for your house, right? Bifurcate the business use versus the personal use. But yes, expenses for hardware and equipment, instruments, all that other stuff is probably deductible to you. I will note as well, insurance on any of these things is also probably deductible. This will come up a little bit later as well, but for many individuals, especially those with lovely instruments or other sort of pieces of equipment that are not necessarily owned by many people, those pieces won't be covered by a standard homeowners or renters insurance policy. So you might want to get additional insurance covered for your particular instruments. And that expense for that additional insurance is deductible. Software and subscriptions. Are these deductible? What do you think? WMH says yes. Rocco says no. Madeline, yes. Ryan, yes. JT, yes. Ciara, yes. Carlos says yes. I'm going to say yes as a general rule. You definitely want to document the business purpose, right? But I can get pretty comfortable deducting subscriptions or software expenses you might have. Now, is this every subscription and every piece of software? Probably not. But there's probably a lot you're using for your creative practice. Maybe you are using some sort of mixing kind of software, or you have a subscription to some sort of mixing database or something like that. That's probably deductible. Any sort of Dropbox subscriptions you have for file storage, maybe subscriptions to Zoom or some sort of platform where you're teaching lessons for students. All of those things are probably deductible to you. I would also note Spotify as a subscription is an interesting conversation. Let's vote on whether Spotify is deductible really fast. What do you think? GF Hines says no. Ciara says no. Jackie and Sunny say yes. Laura, yes. Yeah, some mixture here. JT says no. Spotify is interesting, right? So this gets to kind of your own gut check of why are you using it, right? I think as a musician, you have a stronger argument that you are using Spotify for research purposes or to make sure you are aware of trends or understanding sort of different nuances of the platform. Just like WMH said in the chat, it depends on how you use it, right? I think there's a valid argument to be made that yes, you could probably deduct your Spotify subscription. I think if you are someone who simply listens to it out of enjoyment because you love music, that's a harder case to make. So it would be up to you to document the business purpose. And Sam asked a clarifying question in the chat. I've said document the business purpose a lot. So he asked, do you mean proof of everything you've used the item for, or a simple description of what it's used for, like using software to notate music? Do you need to document every file you've made? Fantastic question. If it is software to notate music, that a general description there would be fine. Subscription to software to notate music, right? That's easy. If it's something like Spotify, where it might be a little bit more questionable, I would do a more diligent job documenting every business use, right? Like research for upcoming composition project on Spotify or something like that, right? In general, a general business description is probably fine. And so for a subscription to the software to notate music, if you're paying monthly or annually, documenting that business purpose that just says, you know, software to notate music is probably perfectly fine. But if it's an expense that's a little bit more aggressive, I might say, I would do a little bit more diligent job documenting it. What about professional attire? This is my tax jacket. I wear it when I'm talking about taxes, so I look like I know what I'm talking about. Can I deduct my tax jacket? It's ordinary and necessary. Jackie says no. Sunny says yes. Sam says no. Ciara says yes. Valeria says no. Carlos says yes. Laura says yes. Ooh, Rebecca says, didn't the rules on that just change? Such a great point, Rebecca. So professional attire is one of these tricky ones. And this is the point where, especially when I'm speaking to musicians or other performing artists, they get very mad at me. I will tell you though, this is not my fault. The rules of the IRS say, if it is a garment you can wear somewhere else, even if you never would wear it anywhere else, you cannot deduct it for tax purposes. So that means my tax jacket, not deductible, right? Performance attire you might have for a recital or maybe to go to an opening or something like that, right? Not deductible. And there's chatter in the chat about whether this is a change. Yes, probably. I would say 10 plus years ago, this was very commonly deducted. I don't know necessarily that the law itself changed, but the interpretation of the law definitely changed. I will say, though, there are some cases where you probably can deduct performance attire. Your shoes, performance shoes, especially this comes up for dancers, but I could see it coming up for musicians as well. If you have shoes that you wear sort of on stage or when you're performing, but you don't necessarily wear them out in the public, that would probably be deductible. Sunny asks about a tux. That's where, it could go either way. If you are renting a tux, your rental fee, totally deductible. If you purchase a tux, I could argue that you could wear a tux to pretty much any wedding you go to, so that should not be deductible. But what if, Sunny, I apologize, I don't know what your instrument is, but let's pretend you're a violinist, and let's say you have your tux altered so that you have some extra room in the elbow so that you can appropriately play your instrument. In that case, you couldn't wear your tux anywhere else because it's been altered to be suitable for a performance environment, right? So that could probably be a case for deducting it. Question about repairs of your main instrument. Could that be deductible? Absolutely. And yes, Sunny says bravo to specially tailored performance garments, right? I think it's interesting here to be careful, right? I think, from a financial standpoint, investing in a tux definitely makes sense. Especially tailoring that particular piece for performances would be very helpful. It would also be helpful if maybe you brought it to the performance space and changed into it instead of wearing it to and from. That would sort of support the point that it's not suitable for everyday wear. I think, dry cleaning. WMH Music in the chat asked about dry cleaning. Dry cleaning professional attire, totally deductible, right? So your garments, your recital attire, your tux, all of that stuff, the dry cleaning on that is deductible. It's a harder argument to make that the dry cleaning on my tax jacket would be deductible, right? That is not something I have ever deducted, just sharing with you personally. But if I were, wearing a beaded gown and doing some sort of performance, yeah, I'd probably deduct the dry cleaning on that. Research. Do you think research expenses are deductible? Vote with your emojis. Yep, I'm seeing a thumbs up, lots of thumbs up. Yes, you are absolutely right. I will say this is an area that could be abused. So this is one of those points where you would want to absolutely document the business purpose very carefully. Think like Spotify, right? That level of deduction would be important here because research could include attending performances, right? It could also include going to a museum to explore a space where you might be performing, right? Especially if you are pitching a grant or something and you wanted to see the space where you would want to do the performance. Purchasing materials, right? Downloading songs, purchasing albums, purchasing legacy recordings, purchasing books, right? All of that is deductible, right? And again, document the business purpose. It's even possible that you will travel to do research. And here's where it does also get kind of interesting, because traveling to do research is a valid part of the creation process. But it's also an area where you don't want to seem like you're really just exploiting that and turning a personal trip into a research trip for your business, right? So I would caution you to be careful, make sure you're making honest choices that you can defend as ordinary and necessary and effectively connected to your trade or business, and then document that connection to your trade or business. One story I love about research, I work with a lot of writers, and one writer was a lifelong Yankee fan, the baseball team, loved the Yankees, and wanted to write a play about the Yankees. And he asked if he could get a luxury box to the Yankees, go to every game, and write off his luxury box tickets as research. And I said probably not. That feels a little too aggressive to me. For context, he had always been a season ticket holder for most of his adult life. So this wasn't necessarily going to be a brand new expense, right? It was something that he regularly already engaged in. And intending to write a play feels like a little bit of a stretch to me. The case where I could easily see writing off tickets to the Yankees as research would be if someone had commissioned him to write a play on the Yankees. That feels a little bit different. It also feels different if he's attending, say, 4 or 5 key games during the year, taking copious notes, getting some reference photos, putting together like a solid body of research that would come out of attending the games. All of a sudden, that feels like a much stronger case for deducting the tickets as research expenses. But every ticket and in a luxury box, and it's already something he was doing, probably not. Office supplies, I won't even make you vote on this one. This one is not controversial. Yeah, these are deductible. These would be pens, papers, anything you have for your students, right? Moleskin notebooks, whatever you need that is sort of office-y and related to your creativity, yeah, that is not controversial. That is generally deductible. And the same is true of marketing materials. Maybe you do show cards for different recitals you have or different performances. Maybe you do some paid ads in advance of different performances. All that sort of marketing expenses would be deductible. And that's not very controversial either. I would say this is an area where sometimes it's easy to spend money without really knowing if you're spending money well. So to the extent that you can pay really close attention to Google Analytics or the return on your marketing investment, whether that is through like a click-through rate or sort of a yield on how many people saw something and then clicked to purchase tickets or whatever it is that you are interested in tracking, that is a really good exercise to take. Home office or studio space. This is one I want to spend some time talking about. This is deductible to you as long as you use the home office space or home studio space exclusively and regularly for your business purpose. I'll say that again, exclusively and regularly, right? And remember, if you have both a W-2 job and some freelance work, you cannot commingle those activities in your home office. Your home office only has to be for your freelance work. I'll come back to the fact that we're in the middle of a global pandemic in a second, but in a normal world, right? Let's pretend you are a music teacher somewhere and you are home and you do some work from home, and that is associated with your teaching work and it's associated with your freelance work. That's not okay because your home office expenses associated with your W-2 job are not deductible, right? So what you would want to do to claim this deduction is identify a space in your home. This could be a home you rent, a home you own, apartment, condo, Airstream, doesn't matter, right? But identify a space in the place you live that you will use exclusively and regularly for your business purpose. Now, the regular use test is really easy to meet. Are you practicing there? Are you using it on an ongoing basis? Is that the spot where you update your website or do administrative work related to your business, right? That's pretty easy to do on a regular basis. But that exclusive test is harder to meet, right? So if the space where you normally do your work is also your kitchen table, it's not going to count. Right? If it is also a guest room that people use and come stay with you frequently, right? That is not exclusively used for your business purpose, right? So that's the hurdle you have to clear in order to claim a deduction for your home office or your studio space. Now, lots of people have this, especially musicians, and especially if you are teaching lessons out of your home, right? So my advice would be, identify the space that is exclusively and regularly used for your business purpose. Measure out the square footage of that space, right? And then measure it out as a percentage of your overall home. So let's say you live in a home that's 1,000 square feet and you have one room or one portion of a room that you use for your business purpose, and that would be about 100 square feet. 100 square feet is 10% out of 1,000 square feet. So then you could deduct 10% of your rent or mortgage payments, 10% of your utilities, 10% of your insurance, not counting the special insurance on your instrument, but just the insurance on the space, 10% of your internet probably, right? So it's easy to see how this could be a lucrative deduction for you. And it's easy to see why the IRS sets some pretty high bars for enabling you to claim this deduction, exclusive and regular, right? Clarifying clarifying question in the chat about exclusive. You can use the percentage, but the space that you're identifying as your home office or studio space cannot be used for anything else, right? That's that exclusive part, right? So that's the part where you are not doing anything else there. And the school where you work at, to this person's point in the chat, this is really interesting right now because so many individuals with W-2 jobs, whether you are a teacher or have another type of employee job, have been asked to do work at home right now, right? Or been required to, in many states, to do work at home. The IRS hasn't ruled on whether or not that's going to compromise your home office deduction if you have that deduction for something else, for a business you're running. My guess is, and this is a professionally informed guess, but still a guess, nobody's going to care this year, right? I think everybody is going to be just fine this year, but I would encourage you to be very careful going into the future. Right? Okay. So Sam asked in the chat, this can be a portion of a room. This person has always lived in an apartment, too small to dedicate an entire room, but you could pretty easily carve out some space to be exclusive to work. Absolutely, Sam. You can carve out a portion of a room. I've heard the question before a couple of times, does it have to have a door? Somebody once upon a time was in some sort of seminar where the instructor said it had to have a door to be a home office or home studio. That is not accurate. That helps, right? It helps show that it is an exclusive space, but you do not have to have a door. So Sam, in your apartment, if you have a desk area, maybe some shelving, right? A spot that is exclusive, what I would do is get a copy of your floor plan, and it doesn't have to be official. It can be you drawing out the floor plan and then just show which spot is exclusively and regularly used for business purposes, and then save a copy of that in your tax file because there's a chance you will move within 7 or 8 years. And that's how long the IRS has to examine your tax return and ask to see any of your records, right? So just save that information so that if they ever do ask questions, you'll be able to say, yes, this is how I calculated the percentage of my space that was used for my business purpose. And here's all the documents. I would also suggest you maybe grab a couple photographs of your business space when it is looking its most professional, right? So move all the kids' toys out of there, or the dog toys, or the guest bedroom, whatever it is. Make sure the space is looking its absolute most professional. Maybe document what it looks like in that state and stick those in your tax file as well. Oh, and this person shared that they're on a school computer, which is why WMH is in your name. So I will stop calling you WMH then. Feel free to drop your real name in the chat. But yeah, the school will often provide the computer for you to use, which is why in the arts, sometimes it's really fuzzy to know if you are a W-2 employee or a contractor, because it feels like it could be the same type of work, right? Another question in the chat from Rebecca. When deducting these home office expenses and you share with a roommate, oh, great question, Rebecca, would you deduct X percentage of the total rent or your own portion? You would deduct X percentage of your portion of the rent, right? Because your portion of the rent, half or whatever your percentage is, right, is only what you have spent. So you would only be able to deduct your percentage of your percentage. I hope that makes sense. That was sort of a weird way of saying it, but you would take the percentage multiplied by the actual money you spent on the rent, not the total rent. Okay, glad that made sense. We touched on insurance earlier. I just want to sort of re-up this, right? For two reasons. Number one, a lot of times people forget that they need to have insurance. So even if you have renter's insurance, which you should, or homeowner's insurance, which you are required to have in most states, that doesn't always cover what you need it to cover as a small business owner or as a musician. So make sure your policy is covering what you need it to cover. And if you need an extra rider to cover a particular instrument, or maybe to cover a very nice computer you have that wouldn't necessarily be covered, definitely make sure you are paying attention to that. And any additional insurance expenses that you have above and beyond your personal insurance policy would be deductible. Travel, meals, and lodging. This is a good one, right? We touched on this a little bit in research, but it's very possible that you will travel either for research or for your professional engagements. And as long as the primary purpose of the trip is business related, and there is an overnight stay, that's how the IRS knows you are in travel status instead of just driving around your own city, right? Then those expenses are deductible. So these could be flights or train tickets or mileage on your car if you're traveling and there's an overnight stay. It would include lodging, whether it's Airbnb or in a hotel or some sort of other lodging situation. And it would include meals while you are in travel status. You can still only deduct 50% of your meals, but it's definitely helpful. There's a great website called gsa.gov that gives you per diem, per day rates for lodging and meals, and then tips in cities all over the world. If you are putting together a budget for something, or if you're doing any sort of work that is grant funded from a governmental grant, your travel expenses may be capped at these rates. In general, I find them to be pretty accurate, with the exception of cities like New York and San Francisco. Your very expensive cities, the GSA rates are going to be too low, but in other cities, I find them to be pretty accurate, more or less. So feel free to kind of use those rates as needed. Now, business miles. This came up earlier, so I want to make sure to circle back. You may use your personal car to drive to gigs or lessons or anything else that's related to your business. And the miles you drive are deductible for business purposes. There is no exclusive and regular test for business miles like there is for your home office or home studio, right? Which is really good news. So this could be something, let's back up. The way you would track this deduction is document the miles that you are driving for a business purpose. There are apps that can do this. Mile IQ is one if you are comfortable having GPS enabled on your phone. QuickBooks also has an app that will track your miles as well. So you can track your miles in one of those apps, or you can just keep a log. You can keep it in an Excel sheet or in Google Sheets or in a little notebook in your car. Whatever system works for you is okay, but the miles have to be captured somewhere so that you can document them. And then you multiply the number of miles times the annual mileage rate released by the IRS. For 2020, it's 57.5 cents per business mile driven. I think it was 58 cents in 2019. These rates are updated more or less once a year unless there's some crazy fluctuation in gas prices. I will note though, remember, driving to and from your W-2 job is not deductible. That is commuting, right? So if you are employed to teach, or if you have another W-2 job, driving from your home to that business location is not deductible. Commuting expenses are personal expenses. The theory being you chose to live where you live and work where you work, so those expenses are not deductible. But travel to and from a student's house for a lesson or to and from a gig, any of that would be deductible. And this also applies if you are taking ride sharing, whether through a taxi or Uber or Lyft or something like that, or if you live somewhere with public transportation, so you're having train tickets or bus tickets or Metro card or subway tickets, right? All of those swipes are deductible as well. Different ways of tracking that. I think for rideshare purposes, I like adding 2 credit cards to the account, one personal and one business, and just make sure you're choosing the right one when you're using the app. That way you'll have a record of the business expenses and it'll be on your business credit card, which makes it a little easier to track. If you have an unlimited Metro card, this gets us back into that conversation about bifurcation, right? Where let's say you spend $120 a month on your Metro card, you would estimate the number of personal trips versus business trips and then deduct the percentage accordingly. Meals are deductible. That was my example of lunch with Peter earlier, right? As long as the meal is ordinary and necessary and has a business purpose. So talking about a workshop, talking about productions, seeking out career advice, right? Getting feedback on something, all of that could be business related, right? And your meals are subject to a 50% limitation. So that means for our $50 pretend lunch that Peter and I had, right? I picked up the bill. I will be able to deduct $25 because that's 50% of the total amount. This would be true no matter how many people were there. So let's pretend I invited all of you to come to lunch with me and Peter afterwards, and I picked up the tab. 50% of the total, including tips and taxes, great clarification, would be deductible. Sometimes people ask as well if you can purchase alcohol at these meals and have them still be deductible. The answer is yes, absolutely. The IRS doesn't care. Now, if you are getting reimbursed for the meal from someone else, whether it's your employer or someone else, right, then there might be a policy on not reimbursing for alcohol, but that's different. That's just an institutional policy. It doesn't have anything to do with tax law. Also worth noting, once upon a time, entertainment was deductible. It is no longer deductible anymore, thanks to the Tax Cuts and Jobs Act. So what that means is if I were to invite you all not to go to lunch after this, but maybe I'm going to invite you to go see a concert, right? And I'm going to buy tickets for everyone to go see that concert. And during intermission, I'm going to ask for some feedback about the workshop. those tickets are no longer deductible, right? Because that is client entertainment as opposed to a meal. There was great clarification from the IRS about a baseball game. So tickets to the baseball game that you might purchase for a client, not deductible. But if you buy your client a hot dog at the baseball field, that's deductible because that's a meal, right? So the IRS just doesn't want to incentivize entertainment expenses. So those are no longer deductible. Professional memberships are deductible. This is not super controversial. So if you are a member of unions or guilds or any other sort of professional organizations and you pay an annual fee, that's deductible. Just look out if any of them say, $10 was spent on lobbying or something like that, because that portion would not be deductible. So that gets us through some of the major deductions on Schedule C. So remember, we were over there in Schedule C business world, where you report your income associated with your business, money from students, sales of merchandise, gig fees, performance fees, grants if they relate to your business, right? Report all that as income. Then you report all of your ordinary and necessary business deductions by category. And then the net amount flows right on through to the front of your personal tax return, which is where you ultimately will pay taxes on that amount. There are some above the line adjustments that incentivize you to set aside money for retirement, either through an IRA if you're an individual, or there are some special retirement plans for self-employed people. As you continue in your career, I'd encourage you to explore some of those because there's some really good incentives there. And then you work down through your Form 1040 and your taxable income then feeds into your city and your state tax form. Because remember, you probably have to pay taxes at the federal level and in your state and in your city. So that means you need to be paying attention to what cities and states you have filing obligations in. And once you've paid attention to all of that, you need to keep really good records to make sure that this process is relatively easy for you each year. And the IRS says there are 4 key pieces of information you need to retain: the date of a transaction, the amount of the transaction, the counterparty, so who did you pay or who paid you, and the business purpose. You've heard me say that phrase, business purpose, or document the business purpose, so many times today. In part, that's because you can get the date, the counterparty, and the amount from your credit card statement or the receipt or your bank statement, but you have to proactively supply the business purpose in whatever system you use to track your expenses. And then you need to save that information in case the IRS asks any questions about your tax form. There are lots of examples here about different systems that people like. This came up a couple of weeks ago in the budgeting session. I gave a plug for QuickBooks. I think it's a really robust system and it will do what you need it to do. FreshBooks, Mint, YNAB, there are lots of other options as well. And then you see MileIQ there. That's the app that allows you to track your business miles driven. And then you need to save this information for 7 years because the normal statute of limitations is 3 years. And then there's an extended statute of limitations that goes 3 extra years if you have a gross misstatement of 10% or more on your tax form, but you might not know if you have that until the IRS tells you. So definitely schedule a lot of time each month to pay attention to your taxes and your records. And with that, I am going to go ahead and close us. Valeria says, what programs do I recommend for filing your own taxes? I love Brass Taxes. They are a service provider, so they will help you. Their rates are really reasonable. But then also Free Tax USA is a new website that came out this past tax season that had really good service, and I liked what they did. Also, TurboTax and Tax Act are great options as well. Can't go wrong. Peter, I'm going to hand it back over to you.
Thank you so much. This was great. I mean, as relaxing and entertaining as taxes can be, I had a great time.
I'm glad.
Super, super great information for everybody. And I know that you'd be happy if people emailed you directly to answer questions.
100%.
And I think that you'll be sending me the slides for this session, and we'll post those, and we'll be posting the video of this. There's a lot of information, and you can go back and get it on your own time. So thank you so much for the last 3 weeks. This has been great. We were talking right before, and I feel like it's the last day of summer camp, and I'm going to miss all of you talking about money. Come back soon. Write in my yearbook.
All of
I
those
really
things.
appreciate it, and thanks to everybody for tuning in. Please do make sure that you join us for our season finale next Thursday, and we will have you back really soon, Elaine, because this has been amazing. So thank you.
My pleasure. Thanks, everyone. Thanks for your great participation and questions, too. Have a good one.